Ibuku, I think you are muted.
Okay, so sorry, I was muted for a bit. Good afternoon, everyone. Good afternoon from across Africa, everybody joining us, and you're welcome to yet another masterclass. We hope that you get to listen and and get the value add. And get the value add we desire you to get from this particular training. So we have here joining me today, we have Foco. Everybody knows Foco Rollins. Foco will be supporting us with the French translations. And we have Adora, who is the new entrepreneurship program executive. She's also joining me today. And we have Tosni Bayo Yusuf from Heirs Life. She's the group head, live and operations at Heirs Life. So she's going to be taking the masterclass today. So please, I'll be handing over to her now to take the session. Thank you, everyone. Over to you, Tosni. And please just introduce yourself again so that they know you. Thank you.
Okay, thank you so much, Ibuku. Thank you, everyone. You're welcome again. My name is Tosin Baya Yusuf from Heirs Life. I head Technical Operations Department of Heirs Life. Okay, so today we are going to be talking about life insurance. What's it about? What really are we talking about when we talk about life insurance? That's basically what we're going to be talking about today. Thank you, everyone. So let's relax. I know some of us think that insurance is boring. Insurance is not such an interesting topic. So we'll be looking at that and really see, is it really boring, or what is it really? What is it about life insurance? Okay, so we'll look at what is life insurance, the myths, the common perceptions about life insurance, and the truths and the facts about life insurance. So what is it really important to us? What are the types of life insurance that we actually have? And our approach at Heirs Life. How do we treat life insurance and in common terms? Thank you. So quickly, I want this I want this to be quite interactive to a great extent. So honestly, what do you understand by life? I don't know, even in the chat box, we could help by explaining what you understand by life. Because you might need to help us to read out maybe comments that are coming. So I want to know, what do you define as life? So what do you call life? What do you define as life? I want people's interaction, please. What do you define as life? Life. Yeah, I know.
All right, so we want comments from everyone. So please, whatever you know, whatever your definition is, just share in the comment section and we will share with us. So please, you can share your comments on what you think life is, so we can share with us. And we want this session to be very interactive. So please, just share your comments, or suggestions, anything you want to talk about, please just share. Thank you.
Okay.
Somebody says life is our existence on earth.
Existence.
And is the bedrock of any business.
Bedrock of any, I love that. Bedrock of any business. That's correct. Okay, do we have any other definition?
Life is a gift from God. And it's the total existence of man. That's someone else also saying that.
A gift from God, the total existence of man. Okay, do we have any other one again before we move on?
Okay, so we have, we do. We have a couple, but the chats are coming in really fast. So life means something, the birth of something new. Life means something new. Then another person here says, life is, okay, so sorry, hold on, please. Life is the period of existence of every human being. That's another comment.
Thank you. Thank you so much. Period of existence. We kept on hearing existence, talking about. So, in addition to what we have said, that's God's given gift to us. In addition to existence, growth. What you were 5 years ago is not what you are now. What you were 20 years ago is not what you are now. So that's actually life. It's an evolution. You evolve. You exist. you grow. It's really what separates the living from the dead. So survivor, that's life. Honestly, life insurance is not far from that. So when we talk about, okay, so assurance, it's really a word. So what do you understand by assurance? Someone says, I give you an assurance. What exactly do you understand by assurance? Now we have defined life. We said existence, we said it's growth, it's God-given gifts, growth, survival, evolution. So what do you understand by assurance? Who could help us out? Just quickly. Assurance. Do you have anyone? Assurance. What comes to mind when you hear the word assurance? What actually comes to mind? Do you have
Okay.
anyone? Any definition?
Okay, so people are still trying to type in, so I'll just wait
Okay.
so we can get their comments. Okay, so assurance is a shorty. Assurance simply means guarantee. Assurance is positive hope. And somebody says life assurance. Sorry, hold on. Person is still typing. Assurance is certainty. It's hope and a future. And somebody else is also saying it's a guarantee. And assurance is something that must happen. That's another comment. Someone else.
I like that. Something that must happen. So when you say you have an assurance, it's something that must happen. Confidence. So I tell you, I'm giving you 2 million tomorrow. I'm giving you an assurance of 2 million tomorrow. That means that, oh, you can go to sleep. You can go to bed with that. That's what it simply means. So what is really life assurance that we're talking about? Honestly, it's just as, it's not more than what we have said. It's an evolution, survivor, a promise, a confidence. Like, okay, this life says is a growth. So that's just what life assurance is. Honestly, it's not really more than that. Forget about the insurance terms. What we'll say that, okay, an assured, a customer, an insured. Life assurance is simply saying that we are giving you a guarantee. We're not guaranteeing your life, we are giving you a guarantee that even after life, this and this is what we can do. Even while we are still surviving, this and this is what we can do. So that's basically what life assurance is. It's just a guarantee to some survivor based on some terms, also guarantee even after life based on some terms so that's been pre-agreed. That's just what life assurance is. So that's how we could define life assurance protection. So we could say life assurance is just, we're not guaranteeing life, but we're saying that if in the course of living this life, if in the course of you growing, if in the course of you moving from one level to the other, this is the guarantee we can give. In the course of moving from one level to the other, in the course of you changing livelihood, because of you changing location, changing this, because of you living life. So in the course of you living life, this is the guarantee, this is the assurance, this is the confidence, this is the promise that we are giving. So that is basically what life assurance is actually all about. So I believe we've taken that concept. That's basically what life assurance is. So for example, you decide to say, okay, I want to take up this policy. I need this money probably in the next 5 years. And then it's okay, I want to start saving towards a party. I have a project. Okay, my intention is to get married in the next 5 years and in the next 3 years. And then I'm like, okay, what do I do? What do I do to guarantee the kind of wedding I want? So what do I do? I take up probably a life insurance policy for that aim. So we are saying that in this particular number of years, you are living life, this is the promise or the guarantee we are giving you. So that's basically what life assurance is actually all about. So quickly, let's move on to the next slide, where we are going to be looking at the myths and common perceptions about life insurance. And also we're looking at facts too. So generally, we look at Nigerian typically, what one of the things we hear people say. So I want you from experience and from perception also, can you just let us know what are those myths and common perceptions you honestly have about insurance? So Just quickly, please, just in the chat box, tell us what are those perceptions you truly have about life insurance, general life insurance. What are those things that, or you feel that this is it? So can we, I know I'm already showing some things already, but can you, from your own maybe experience, your perception, people's experience, what you have heard, what you truly understand by life insurance or life assurance as we call it actually. So what really do you understand?
So please, just to reiterate what Tosin has said, if you have any comments, please share in the chat box and I will share with her. So please, we're waiting for your comments. What you think life assurance really is, or what's the perception you have about it when you hear about it, or when somebody speaks to you about it. So please share in the comment section. Thank you.
Okay, so why those?
Okay, so I have one here.
Okay,
it's quite funny. So the person said, people think you pray for them to die when you tell them about life assurance or life insurance rather. And then it's very expensive. We're at the losing end at the end of the day. And then somebody else says it's protection against possible eventuality. There's another one here that says life insurance is a fraud. Insurance chops your money. And that I never get to benefit from my life insurance. So these are the perceptions they've gotten over time about when people speak to them about life insurance. They feel, it's just fraudulent, like you never get the money, or they pray for you to die so your family takes some kin. So yes. So
okay. So thank you so much. And honestly, I'm trying to see if there was something that was not captured in these things that has been said. So I heard that they're on the losing end, that we're on the losing end, fraud, you never get to benefit living, and then there's more or less like a prayer for death. Okay, so let's just really talk about this. Now, the first thing I have on my slide is fraud. The truth is life insurance is not fraud. Now, one of the evidence you can get is that, for example, sometimes, maybe we need to publicize more how much claims we pay on a monthly basis. Many insurance companies pays up close to $1 billion. For many pays more than $1 billion on claims on a monthly basis. And that is the reality. Now, we actually have regulators in place. Their name is NICOM. NICOM is our regulator. For NICOM, keeps an eye on claims every now and then. And it's because of perceptions that Nigerians or generally Africans or people around the world has about insurance generally, and that they don't want to pay claims. Honestly, it is no longer the case. It is no longer the case. One of the mantras we actually have here at Heirs Life is that we pay our claims within 24 hours. And I can tell you that is exactly what it is. That is exactly what it is. And honestly, you must know that life assurance now has taken a whole different toll. I'm going to address some of the points that have been listed. So I'm still on fraud. Life insurance is not a fraud. For those who have benefited, maybe because the uptake is not that high, the penetration is still low, and so you don't get to see a neighbor or two who actually has benefited from life insurance. But if you are opportune to meet one or two, honestly, they will tell you how good it feels. In fact, I've had cases where people came to collect claims that probably their husband took on their behalf of the children, and then they couldn't just believe that life insurance was actually paying them money, which ran into millions. In fact, some had said, you know what, I don't want all this money at once. Can you hold on to it and buy under policy and give me on a yearly basis? Honestly, it works. It truly, truly works. It is no longer a fraud. It is no longer fraud. Maybe in the past, maybe people feel that, they look for one excuse not to pay. It is no longer the case. And this is as far back as maybe 40, 30 years ago, 50 years ago, that the experience people has had based on the industry at that time. And I must tell you that has changed many decades ago. Not even a recent thing, it has changed many decades ago. Now, one of the things I also heard is that it is expensive, exactly what I have here. Now, if I tell you that for for a life insurance of 1 million naira, you might not get to pay more than, in fact, 5,000 naira for a year. When I mean a year, as in 12 months, January to December, all you have to pay in a year is no more than 5,000 naira for up to a life assurance, what we call sum assured, a value of 1 million naira. Are you going to believe that? In fact, we actually drew, in fact, let me even go lower. We currently even have a product that runs on 100 naira monthly. So we are saying that we have product that you pay 100 naira monthly and you get a life insurance cover. Life insurance is not expensive at all. So it's actually a myth, that's a perception. It's actually a perception. And honestly, I do not know why it is so. Life insurance is not for the rich. It's not just for the rich at all. It's for the men. In fact, more of the middle class and the lower class even needs life insurance even more than the rich. It's not expensive at all. You can go onto our website in Heirs Life. You will actually see products that go for 100 naira a month. And 100 naira, we're talking about a bottle of water now. Let me show you an example. So you want to buy this bottle of water now outside, it's going to be 100 naira. So we are saying you pay 100 naira for a month to get a life insurance cover of up to 100,000. And then if you want to pay even in advance, you could get up to 1 million, even for as low as 5,000. By the time you must buy it over, it is cheap. So it is very, 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 very far. It's not correct at all. And it's not the truth about life insurance. So life insurance is not expensive at all. Depending on the age, even to some extent, some people could even pay way lower than that, depending on the age. So we must honestly take that out of our mindset. Life insurance is not expensive. On the contrary, it is extremely cheap. But most times we are not aware. So my third point here says life insurance is a luxury and not a necessity. And I must tell you that truly, as we said, by the time we have more penetration in the country, you will have a neighbor, you have a friend who has actually benefited. Now, if you have somebody who has benefited from life insurance, honestly, they will tell you it is not a luxury at all. It is not a luxury. It's a thing that you must have. I give an example. So many businesses would have been ruined from the last riot we had from the emergence of the last protest we had in town. But say for some of them who had insurance policies in place, who had come to claim heavily, we had paid so much claim on fire, we had paid so much claim on theft, so much claim had gone based on the last protest. And honestly, these people have been returned back to business because they had the life insurance in place. So it is very, very far from luxury. And the truth is, because life insurance is so cheap, it's extremely cheap, we need to be aware that, as I said earlier, for as little as 100 naira a month, you can buy a life insurance policy. We can buy a life insurance policy, and our claims process is as easy, simple, and smooth. And in 24 hours, you make a claim, you document it, you get your payments. It is, in fact, once you go to our website, you get a quote in 5 minutes, you make your, and if there's a claim, it's the same way. Honestly, that is the way it is now. With the emergence of many new insurance companies coming into the industry, it is changing. It is changing, and we can see that insurance is actually going more digital. The next one talks about life insurance is for the old people. In fact, the truth is, earlier in my career, I met a very young man who actually on his own walked in to buy an insurance policy. Honestly, I found that honestly so strange. It was really so strange to me that how you have somebody under 30 who actually walks in to say he wants to buy a life insurance policy. But after my interaction with him, I realized that he actually has benefited from a life insurance policy from his parents. And so he understood where life insurance came in. And so he was able, even at a young age of 20-something, because he was married at that point in time and I started having children, and he wanted to take up a life insurance policy to cover his children also, because he has also been a benefactor. And so you see where it comes. And the truth is, at that age, when you buy life insurance at that age, it is way cheaper. In fact, it is extremely cheaper. For a sum assured of let's say a 10 million naira, you might not be paying more than, in fact, you won't be paying more than 100,000 in one full year. It will be way less than that when you are younger. But when you are getting older, it becomes a little more expensive. Even as expensive as it gets, you might not, even for a sum assured of 10 million, we'll come back to what sum assured means. Sum assured means the value you want to place on it. It means the value you want to place on the policy you are buying. That's the sum assured. We'll actually come back to terms about policies. So it is not for the old people. In fact, it is cheaper when you buy it as a young man. And now, because it is digitalized, it is easy. Just go online, you get what you want to buy. Go to the website, you get what you want to buy. Easy. You see the premium. In fact, you could just test run. Go onto our website at Heirs Life. You will simply see that you could easily get a quote as you want, put your age, put the amount you want, and you simply get what it is. And at a go, you can actually finish purchasing the policy. It is that easy. It is that easy, and it is not for the old. The younger you are, the cheaper it is. In fact, we have policies like we call Whole Life. We will still get to that. Whole Life policies, once you buy the policy and you decide to pay for a particular period of time, you are covered for the rest of your life. Even you decide to live to 150 years old, you are covered. We have policies like that. Now, somebody also talked about you're on the losing end, and then you don't get to benefit in your lifetime. It is a myth. It is a myth. It is not correct at all. So we have different types of, we will actually get there also when we have different type of life insurance policies. So when I get there, I will talk more about that one of losing end and benefit. Then somebody said like we are praying for death. It's not the case. Now, the truth is we do not own our lives. And that is a reality. That is a fact, the truth. We don't own our lives. So somebody who actually is late today, it's not their making. It's not because there was something they did that was wrong. It's not because maybe they did not serve their God well, or it's not because there was something they ate that they shouldn't have eaten. But the truth is we don't own our life. Life happens. Life happens. So when life happens, what then follows? If life happens, what then follows? We don't own our lives. Our maker actually own our lives. So what then happens if we don't have it any longer? So most times it is good we actually make plans ahead, just for those we are leaving behind. And then another one says life assurance protects against death. No, life assurance does not actually protect against death. Actually, it only helps you to be ready. So to say, it helps you to be ready. Okay, should death occur, am I rest assured? So for example, now, you have this iPhone you just bought at really, really an expensive amount, and then you are afraid for it breaking and then getting damaged. You are afraid for it getting lost. You are afraid fire, anything or theft could occur, and then you really do not want to lose your money. But as soon as you have your life insurance on that iPhone or iPad now, as soon as you have your as soon as you have an insurance cover for it, there's a peace of mind it gives you. There's a way you feel rest assured that come rain, come shine, it falls down, I get my money back from the insurance company. It gets stolen, I get my money back from the insurance company. So there's a peace of mind it gives you. So really, that is really what life insurance should also be about. So when you know you have that, okay, my children's education, my wife's, my parents, my brothers and sisters, my education that I have, that I want to achieve, I want to go and read law in the next 5 years. There's a way you know that this policy I'm taking up, there's a way it gives you rest of mind for that project that you have ahead. So really, that is really what it should be all about, and not like protecting against it, but just that rest assured, having that peace of mind, that peace of mind it gives, that you have an assurance. And don't forget that we are defined assurance as confidence. We are defined it as what was the other words we used? And we said confidence, we said being rest assured, a promise, being assured of something. Thank you. So let's quickly move on to the next slide. Okay, So basically, we're going to talk about importance, yeah? So what are the importance to you as an individual? What is life insurance? What is the importance to you as a business? So the first thing that comes that we have on the slide here is it secures financial needs, whether you are there or whether you are not there. It secures financial needs. I told you of a case. In fact, because I've been in the claims department for over 4 years, so I have seen several cases. We have seen people who, upon seeing the amount we're going to pay them, honestly busted into tears, which was actually tears of joy. So you mean my husband actually remembered us and catered for our children this way? And the truth is, it helps families with financial needs. So if the breadwinner of the family goes and there is no more today, what happens? What happens to the spouse he has left behind? What happens to the children he has left behind? So it actually helps financial needs. And then you realize that for life insurance, what you pay is nothing commensurate with the value you are getting. So as I said earlier, you want a value of up to 10 million and you're even paying less than 100,000 for it. It's, if I let me use a smaller one, the one of 100 naira per month you are paying on a monthly basis, and then you are getting a life cover of 100,000. 100 naira, 100,000. Honestly, it's not weighing. It's not commensurate. That's just it. But it helps relieve financial burdens if the support is no more. Now, retirement plans. Now, this speaks also to the point someone raised about that you don't get to benefit or you are in the losing end. It's not correct. It's not correct at all. You can take up a life insurance policy simply for your retirement plans. You can decide to say that I want to retire in the next 10 years. I want to retire in the next 20 years. Okay, for this my retirement, what do I need at that point in time? And then you come to us. I want to plan for my retirement plan. What do we do? So we then begin to tell you, okay, take up this policy. You can take up this policy and begin to save towards it for the next 10 years. You have this bulk money. You feel that, okay, for my retirement, I want to drop this money so that at retirement, begin to pay me so amount of money on a monthly basis. We have several plans as regards retirement plans. Life insurance actually support retirement plans. So it is not the case of you don't get to benefit. No, it's not the case at all. The third point here speaks to investment purposes. So we have policies in life insurance whereby we call it, we actually call them endowment policies. In endowments, we have pure savings and ones that are really, really pure endowments. We have more or less mixed. Now, endowment actually is whereby it gives protection on one hand, and on the other hand, it actually gives investment returns. So we have policies whereby you can save. In the course of you saving, your life is covered for that value. So for example, let's say you have 5 million naira value in mind. So it comes to us, tell us, I want an investment whereby I can have a value of 5 million naira. So I'm saying that if, God forbid, I die today, pay my beneficiary 5 million naira. But if at the end of the plan, I am alive, that's after like 5-6 years, depending on what you want, I am alive, I also want you to give me that 5 million naira. We have such plans. So life insurance actually covers all that. So it's not just about death alone. We have plans whereby if you survive the plan, you get that value back in return 100% with extra, which is the accrued interest or bonus that we also talk about. So we have those those are the benefits it brings to individuals, it also brings to businesses. Now, life insurance can be used as a collateral. So you approach this financial institution and they're asking you, give us a collateral. Now, if you have a life insurance policy in place, you can use it as a collateral to collect loans, to secure loans. So you can use your life insurance policy to secure loans. You can use it to secure for any financial institution. So those are the things we really need to know about life insurance. They can be used to secure loans as collaterals. They can stand in for you for any loan you are collecting, as long as the loan you are collecting is within the value of the amount that has been placed. So you can use that as collaterals for the loans. Now, also, it is also used as a form of tax relief. So you pay as an individual, you pay tax. As an organization, an SME, a small and medium scale organization, you also pay tax. You can, if you have a life policy, you can use it to get tax returns from the tax relief from the government. Actually get tax relief from the government. Okay, so another point is if you are in a partnership with an individual, your company is a partnership with an individual, it can be used to buy up the capital from the deceased partners. So that's actually what we call a key man assurance policy. So if you take up a key man assurance policy in life insurance now, it's telling you that now you are in a company, maybe you are more than one partners, and then the other partner is maybe the main financial person who brings in the finance, or who actually is one that makes sure that the business continues to grow. If you take up a key man assurance policy, which is actually a life insurance policy, and that disease and that partner is dead or is physically unable to continue, he has a critical illness or is permanently disabled, now you can use that policy to buy off his capital so that the company can continue to exist. So those are benefits that people are not actually aware of a life insurance policy. These are benefits that actually come with life insurance policy. Also, there's something we call capital transfer tax. So for people who have actually inherited something from their parents, maybe there's an estate. Now, if there's an estate and then they've gotten an inheritance, there's something we call whereby the government taxes them for inheritance tax. So, and it's usually on the heavy side, usually in big percentages and huge percentages. Life insurance can actually help you to cater for that capital transfer tax. So you have, there's a life insurance policy that the disease has taken up. You can use that to cater for that payments you need to make to the government as regards the inheritance. Also, we spoke earlier on Keyman. So loss of profit, there's something we call loss of profit. So for an SME, it's, for example, most one-man companies whereby there's a destruction because of the death of a key person in that organization, and then the company is almost folding or going or making a loss. When you take up a key man assurance policy on that line that has been lost, it cushions the effect of the profit that will be lost within that period of time. Also, life insurance now also helps you when you need to take short business trips. So you want to just travel out of a location and then you just want some cover. You want some cover. And then, so that's probably what we call a travel insurance policy. You can take up a time insurance policy for a short business trip. So you're like, this place I'm going to, I'm not so used to the place. I just need something to give me security, something to cover me. So, you could go there and then you could decide to, you could maybe fall ill, something could happen. So life insurance actually helps cushion all of that. Please, when you have your questions, kindly type them into the chat box so that we could actually treat them as we go on. Okay, so quickly, these are the basic buckets we have in life insurance, actually. Now, we would treat savings policies, investment policies under endowment. So we basically have three, I don't know, should I pause or should I continue before we ask questions, or should we pause till the presentation is over?
No, we can take the questions after your presentation. So
okay.
Yeah.
Okay.
We'll take the questions after your presentation.
So we'll do that. So let's talk about the basic buckets that we have for life insurance. So in life insurance, we have what we call the term life assurance. We have what we call the endowment assurance. We now also have what we call whole life assurance. So basically, term assurance is just saying that there is a pure protection policy. It's telling you that for a particular number of term, what we call term now is duration. You can also use the word duration as term. So you say that for the next 5 years, I want to cover my life for up to 1 million naira in the next 5 years. So you could make annual payments, you could make quarterly payments, okay. So you could make single payment too. So for this term assurance policy is purely a pure protection assurance policy. It's purely protection. Even under term assurance, we have what we call cashback. So most term assurance policies whereby somebody talked about you don't get to benefit. It's not actually entirely correct. So for term assurance policy, basically, you have a period in which you could actually collect. So some policies actually have what they call cashback. So if you have contributed for, let's say, 5 years, and the policy allows you to take a cashback, after like that 5 years, you could take a percentage of what you are, if there was no loss, you could take a percentage of what has been paid back to you, and then before you continue the policy. So I go on to endowment. So an endowment is of two faces. If you read what we wrote, it says sum assured is payable on the death of the life assured or maturity of the policy. So in endowment, we have what we call policy maturity, meaning that the policy had matured, which is there at expiration. So at policy maturity, you will definitely get something back to you. So that is what we call endowment. So endowment is a mix of pure protection, at the same time investment. So that's what we have for endowment. So it's a mixture of protection and investment. In endowment policies, we also have what we have savings policies under it. So under the savings policies, you could decide to say, I want a life insurance cover of, let's just say, 500,000. You get to pay the premium based on that 500,000. You will get what premium is also. You get to pay the exchange for that 500,000. And then you now say that aside from that cover I have, I now want to be contributing, I want to be saving, let's say, 5,000 naira every month, 10,000 naira every month. So you keep saving towards that, or keep saving on that policy. So at maturity of the policy, which is when the policy now elapsed, let's say the policy is 2 years. At maturity of the policy, you get your money back. But the premium you pay, which is usually very small for that life insurance policy. So for example, that 500,000 naira cover now, the premium you get to pay is 1%, which is really cheap. It's not expensive like someone said earlier. So on that 500,000, your premium you get to pay is just 1%. So 1% of 500,000 is actually 5,000 naira. So you get to pay 5,000 naira just once, that covers you for that entire year. Then you get to now save the money you need to save normally. If it's 5,000 naira, it's 10,000 naira, you get to save that money for that period. And at the end of that period of that policy, which is at maturity, you get your money back with interest. So you get your savings, what you have saved, back with interest. So we now have another type, which is a pure endowment policy. Now, the pure endowment policy is a policy whereby you say, I want a sum assured, I want a value at the end of this policy of 5 million naira. So let me say 10 million naira for argument's sake. So I use 10 million naira. So if you now tell, I will not tell you that based on your age and based on the duration, let's say you want a 5-year policy. So based on this, your 5-year policy and your age, your premium payment is going to be, let's say, 15,000 naira every month. Now, if after you have paid 3 months payment, in fact, even after 1 month payment of 15,000 naira, God forbid bad thing, if an accidental death occurs. If there's an accidental death, your beneficiary will be paid 5 million naira. That is the way life insurance works. So if at the beginning of that policy, if there's a loss of life, if the unfortunate happen, your beneficiary will actually get that amount you say you want, even though all you have paid is just that 1 month payment, which is 50,000 naira. And this same policy, if at maturity, nothing has happened, you are ill and hearty, as we will say, you have refused to die, which is good for us, you will get your 5 million naira back. Even the total amount you have paid is less than that amount. So you will get that 5 million naira back as you said you wanted. So that is actually what endowment is all about. So endowment is actually a win-win. You don't get to lose on endowment. Unlike what we are the losing end. It's not the case. It's not the case at all. You're not on the losing end at all. So it's an endowment policy is a win-win. It's a win-win. So the major differences between a term assurance policy, a whole life policy, and endowment policy is that for a term assurance policy and whole life, they are relatively more cheaper than an endowment policy. Because an endowment policy, you get to collect your sum assured back. So generally, a term assurance policy, a whole life policy is extremely cheaper compared to an endowment policy. So I believe you understand that endowment now. It's the one that has the investment arm with it, whereby it's a win-win case. You don't get loose on any front. Whole life. So let's talk about whole life. Now, whole life, as the name implies, is whole life. We are saying that we are covering you for the rest of your, as in, once you take up the policy and you're paying your premium, you get covered. If death occurs at age 150, your beneficiary will collect money. If death occurs at age 200, your beneficiary will collect money. Now, the sweet thing about whole life policy is that for whole life policy, you could decide to say that, okay, I'm in my working life now. Let's say I'm 35 years old. I'm in my working life and I feel that I can pay the premium for the next 10 years. So you now decide to say that, okay, I want to stop paying premium at age 45. So by the time you say, I want to stop paying premium at age 45, we will give you an amount that you pay to that age 45. And when you stop paying premium at age 45, you are covered for the rest of your life. Do you know another interesting thing with the whole life policy? Another interesting thing with whole life policy is that there's something we call surrender, meaning that you just feel that I'm tired of this contribution, I'm really tired, I don't want to continue with it, I want to collect my money back. Definitely for an whole life policy, because of the benefit it gives, you cannot collect all of your money back, but you can collect a percentage of what you have contributed back. So generally, it's usually up to 2 years. You have to wait like 2 years. So after 2 years, you could decide to say, I'm not taking this policy. I don't want to continue with this policy. Let me collect what I've paid back. Let me collect some percentage. So you can get a percentage of what you have paid back on your whole life policy. I hope you are getting it. So whole life policy covers is a pure protection plan, even though you can surrender it, meaning that you can say I'm no longer doing. At the same time, it gives you the advantage of choosing a time you want to pay. So you could decide to say that I want to retire at age 50. Age 50, I'm not going to be earning salary again. So I want to take up an whole life policy whereby I pay my premium from whatever age I'm starting to age 50. So I believe these are the three basic buckets that life insurance actually falls under. The term assurance has a particular period. So for term assurance now, you could decide to say I want to do term assurance of 10 years or 5 years. So meaning that if death does not occur in that 10 years, then a claim cannot be made after that 10 years. But at the same time, term assurance also has a cashback policy, whereby some policies have cashback, whereby you could decide to say, okay, after 5 years, if there's no claim in the last 5 years, we'll pay you back a percentage of the premium you have paid us. So that is it with this slide. We'll go on to the next one quickly. Okay, wow. So this actually defines what we have talked about. So these are just the basic advantages of what we have as regards the various policies. Life term assurance is a life protection. It can stand as a collateral for you. You need to take short business trips. You can take up a term assurance policy. Take up a short term assurance policy for 1 year. They have short terms. You could do 1 year policy for as low as 1,000 naira. I'm telling you, a life insurance policy, you pay 1,000 naira for 1 full year cover. That is it. You pay 1,000 naira for 1 full year cover. You could take it up with term assurance policy. You can get a tax relief from the government from a term assurance policy. So the next one, which we also talked about, is the endowment. The same thing, life protection, investment purposes. You need to secure your children's education. So your child probably is in, let's say, a primary 5, and you're saying that, okay, let me save for his university. So you need to take up a 5-year policy or a 6-year policy that, okay, by the time he's going to the university, I need to have this money at hand. So you just take up an endowment policy for your child's education. Take it up for 5-6 years, depending on the age. So for example, if your child is in a primary 3, you might be wanting to take that policy up for like 8 years, 3 and then 5 years. That, okay, by the time he's entering the university, that's in 8 years time or 8-9 years time, I need this money. So you decide to take an 8-year policy for that particular purpose. So it's really, really encompassing actually. So for pension purposes, you could decide to say, okay, I want to take up an endowment policy. I want to retire at age 65. When I retire at age 65, I need this amount of money. So you take up the policy for the next maybe 10 years, for the next 5 years, for the 7 years, 8 years, 9 years, 15 years. Take up and start contributing towards it and say, okay, at retirement, this is when I need this money. So it's the thing you take up because you want to augment whatever pension that you already have. You want to augment whatever benefit that you already have. Those are the essence and advantages all this kind of policy brings to us. Also, it can be used as a form of collateral and a tax relief. So all life, as mentioned earlier, is all the same too. Used as collateral, tax relief. You can use it to purchase a deceased partner's shares and a form of life protection for our loved ones. So what is our approach now? So we are Heirs Life. We are under Heirs Holdings. TEF and Heirs Life are actually sister companies. So what's our approach here? We looked at insurance. We looked at all these myths, all that we have heard about life insurance. It's a fraud. You don't get to benefit. The process is cumbersome. You have to fill one form or the other. The letterings are small. You don't get to see them. Those are all the things that we looked at in Heirs Life and tried to come up with a simple approach. And this is our approach in Heirs Life. Insurance made simple. As we said earlier, go onto our website at heirslifeassurance.com and really see how simple it is. In less than 5 minutes, you can get a quote. Meaning that I go on to the website, I put in my age, I put in the amount I want, I put in the duration I want, and immediately I get a quote. It's that simple. If there's a claim, just go onto our website, just and lodge your claim there. We are telling you in 24 hours, we are making payments. As long as the documentations are completed in 24 hours, we're making your payments. So insurance made simple is our major approach we actually have brought in. Now, we also looked at smart protection made for you. Don't forget, I mentioned the 100 Naira product. Those are one of the things that we offer in Heirs Life. For 100 Naira, you can buy a life insurance policy. 100 Naira, that's the price of a bottle of water. The price of a bottle of water. You can buy a life insurance policy. So that is smart protections. You want to save for an education purposes for yourself in the next 5 years, in the next few years. Smart protections. In fact, we have a product that is called couples plan, whereby you don't have to be married, whether you're married or not. You could just okay, you just want to have maybe you want something you want to do jointly as a couple in the next 1 year, in the next 2 years, the next 3 years. Take up the couples plan and begin to contribute towards it. And at the beginning of the plan, it tells you exactly how the proceeds is going to be distributed accordingly, because it's more of an investment kind of policy. So as a couple, you could decide to take up an investment policy together as one in Heirs Life. Those are all the things we are actually offering it to you for Heirs Life. So we are also committed to lives and transforming Nigeria. If you look at our major word, Africapitalism, which is our word in Heirs Holdings, these are the things we have made priority to us. We are really, really, really consciously working for that. We are committed to improving lives. We are committed to transforming Nigeria and African as a whole. Committed to transforming African as a whole. Those are our commitments actually we are putting to the public. So this is our approach in Heirs Life. So quickly, which is the basic, the last set of thing we have to present, our terminologies. And so you read all the big grammars. We have life assured, we have policy holder, we have beneficiary, assurer, sum assured, maturity value, bonus. Those are some of the things we talk. So life assured is the person who is actually taking up the life insurance policy. So as an individual, and you decide to take up one of our policies in Heirs Life, you are the one who will be called life assured. That means we are assuring your life. Now, policy holder or assured, it's the same thing actually, or it's the same time. So there's a person who actually takes up the policy. So we have cases whereby somebody takes up the policy and he has many life assured under his portfolio. So you taking up the policy, you are the policy holder. You could call you actually the assured person. Beneficiary is the person who actually gets to benefit from the policy that has been taken up. Assurer, that is us, Heirs Life. The person of the company offering that policy to you is the assurer. So sum assured, I'm sure you've heard me talk about sum assured. That is that value, that guaranteed amount, that promise we are saying, that confidence we are giving you, that value of confidence we are giving you is that sum assured. Is the guaranteed amount that the company is going to pay if a claim occurs. So that is the sum assured, that is the value. that we are promising as a life insurance company. Maturity value. So there's something we call maturity value, which I've mentioned. I talked about maturity, that your policy matures. So those endowment policies, they actually mature. So when they mature, we pay you back what we have promised. We pay you back what we have said we are giving. The assurance we have given is what we will now pay you back. That's the maturity value. That is that guaranteed amount at expiration of the policy that is called maturity value. Then there's also what we call bonus. So we usually give bonus to customers who are actually paying premium regularly. They get to earn a bonus. It can be reversionary, it can be terminal. So reversionary is whereby you pay consistently for one full year, you get a bonus based on that payment. So those are terms that we use in insurance. We also have what we call premium. I've also mentioned premium earlier. Premium is that financial consideration you give. So that financial commitment. So I mentioned 100 naira earlier for a life cover of 100,000. That 100 naira you are paying, which is that I was compared to the price you pay for a bottle of water. That is what we call premium. So that is what we are actually calling premium. That consideration you are giving for us to give you that life insurance cover is what we call premium. So proposal form is the form you fill, and these days, because it's digital, if you go onto our website now, once you get your quote and you say you want to go on to buy the policy, you fill out the form. That form you're filling is the proposal form. It's now digital. It's a digital proposal form. So you fill out the proposal form. We ask about you, tell us your name, your address. Okay, so how old are you? So those are the proposal forms. It gets basic information from you. You need to know who we are insuring. So those are the basic things. So policy document is what we give you in exchange for that premium you have paid us. That commitment. So that confidence we are giving, that promise we are making you, that document we give you to say that this is your policy document, that this is our contract between two of us. That is actually what we call policy documents. So we have what we call riders. So, in life insurance, the basic cover is usually death and permanent disability. So in fact, permanent disability can be riders. So those, if you now decide to say that, I just don't want death, I also want to cover loss of job. So if there's a case of loss of job, what do I get? So those are what we call riders. So what if I want to cover critical illness? What if I don't die and I'm critically ill and I'm not able to earn the money the way I was earning before? So those are what we call riders. So what if I'm permanently disabled? I had an accident, I didn't die, but I'm permanently disabled. So what happens? So those are what we call riders. Those are extra additional benefits. Sometimes they are given free of charge. Sometimes it comes at an additional cost. So surrender value, I mentioned earlier surrender. So I said I was going to talk about it again. So surrender value is when, for endowment policies, they get to earn a surrender value because it's an investment-linked policy. So is that value that the policy has accumulated based on your commitment to the policy? Is the value the policy has actually accumulated that we call a surrender value? So if you decide to take up a life insurance policy of 5 years, an endowment policy or a savings policy, you take it up for 5 years. In 2 years, you now say that, oh, I'm tired, I can't continue with this policy. So in that 2 years, what we pay you back, what your policy has earned in that 2 years, what we call surrender value, the value that the policy has earned on the policy. There's also something we call paid up value. Oh, I'm not too fast. So there's what we call paid up value. Now, paid up value is very similar to surrender value, but the difference with surrender value and paid up value is that paid up value will be paid to you at policy maturity, meaning that for one reason or the other, you just feel that I like this policy, but I cannot continue with it. I cannot continue paying premium. So you will now come and tell us that, see, I don't want to cancel this policy, but I can also continue to pay the premium. So, for example, if you have told us that it's 5 million naira, what has your sum assured for? We'll not tell you, okay, based on this premium you have paid also, the value of your policy will now reduce from 5 million naira to 2 million naira. But that 2 million naira will keep you covered for the period of that cover, for the period of that policy. Will keep you covered for that period, but for a reduced amount. So your 5 million now comes to 2 million. But even though you're no more paying premium on the policy, you will be covered till the maturity date, but for a reduced amount. So let's assume that you had picked up a value of 5 million naira initially, you have paid a premium for 2 years, and you said, I can no longer afford to pay on this policy, but I do not want to cancel it because you want to enjoy the benefits. So we'll keep that policy running for you. You will still be covered appropriately. But the only difference is that the value will reduce from what it is based on the new value we calculate for you. So that value we calculate for you now is not the paid up value, meaning that you have paid up on this policy but at a reduced amount. So premium rates is just, I mentioned 1% earlier, that's what we call premium rates. So I say for a cover of 100,000 naira, your premium rate is 1,000 naira, which is like 100 naira every month. So that rate will give you 1%, 500 naira, 500,000 naira cover that comes at 1%, which is 5,000 naira on an annual basis. That's the rate. That's what we call the premium rate. Claim, that's just it. Payable, that's the amount we pay. So if at maturity we pay up your maturity value you have paid the claim. If at death we pay up the amount. So those are our terminologies that we have in insurance company. So I believe this is the end of the presentation. Thank you. So can I stop sharing now? Ibukun? So that's it. So let's entertain the questions.
Okay, thank you, Tosin. Thank you very much. So please share your questions in the comment section. Adora, please, you also support with compiling the questions so Tosin can answer. So please share your questions in the comment section. And thank you, Tosin, for an amazing presentation. From the comments, the entrepreneurs are actually excited about it. So let me just read a few comments from them.
Okay.
Yeah. Okay, so thank you, Tosin, for this session. Knowledge is power, very, very impactful. Thank you so much, Tosin. And then there's more. There's more. Thank you, Tosin. Thank you. They're all thanking you. Very interesting and important discussion. Thank you so much, Ma. Thank you, TF and Heirs Life. There are more here. Great session, very interesting and impactful. Yeah, so they're just saying they really enjoyed it. It was very informative and very impactful. So we're still waiting for them to send in their questions. So please, if you have any questions, kindly share so we can share with Tosin and she can answer your questions. Adora, do we have any questions yet?
Yes,
Okay, can you go ahead and share the question? Thank you.
So someone asked that what is the difference between life assurance and pension fund?
Okay. Tosin, did you get that?
Yeah. So life assurance and pension fund. Okay, so pension fund is usually contributes. So you contribute towards your pension as you, especially if you are working. Even those who are not, who are doing regular jobs, even those who are not doing regular jobs could actually contribute towards pension. So you don't get to collect your pension until you are retired. So it's only as retirement you get your pension fund, and you don't even get it 100%. You only get a percentage back, and then the pension administrator begin to pay you on a monthly basis like a salary. So the essence of pension is that when you retire and are not able to work again, you are still able to earn something on a monthly basis to feed you. That is the essence of pension. So life insurance that we're talking about here is for you to save and also have a life cover. So life insurance now, I mentioned earlier, we have the pure protection, we have the endowment. So for the pure protection, if a loss occurs, we pay a bulk sum to the beneficiary. If it's the savings one, you are the one who is actually saving, and you have given us a specific period. So if your specific period ends at age 45, at that age 45, we'll pay you your money back. Unlike pensions, that if you don't retire, which is a minimum of 50 years, you cannot get your pensions. And even when you get your pensions, you cannot get it 100%. Currently, the most you will get is 25%. The 75% will not be spread over a number of years, and you'll be paid on a monthly basis. The 75% will be spread over a number of years, and you'll be paid on a monthly basis, like as if you are collecting your salary. So pensions will be paying you like salary. A life insurance policy will pay you bulk at maturity date. And the maturity date does not have to be when you are 50 or 65 or any age. It can be when the policy term expires. So as I said earlier, you take up a policy at 40 years old, and you took a policy up for, let's say, 7 years. After 7 years, you get your bulk money back. But in pensions, you cannot get it until you retire. And the minimum age to retire is 50. And you cannot even get it back 100%. You only get a particular percentage up to 20, it might not even be up to 25%, depending on the amount and what you earn before you were earning before you retired. And then you get it like a pension. I hope that is clear.
Thank you so much.
Yeah.
Thank you so much, Tosin. Thank you. Do we have other questions, Adora?
Yes, there are other questions.
Okay, please go ahead. So Tosin can take them.
Okay, so somebody asked that, do all financial institutions accept life assurance as a collateral?
Yes, they do. Yes, they do. As long as as long as the policy has a what we call cash value. So once your policy has a cash value, meaning that if you come and surrender it today, you get something in return, you can use your policy as a collateral. They all do, actually. So once they tell you, go to a bank, they say, or an institution that gives out loan, and they are saying that what do you want to use to stand? If you have a life insurance policy in place, yes, they will take it as a collateral for it to cover in case death occurs. So they will take it as a collateral. They do, actually. So they do. Even in addition, there are policies that do not even have cash values. For example, your term assurance policy. So, for example, you are taking up a loan for 2 years. You have a lifetime assurance policy with us up to 5 years, and you have made payments to cover yourself for that value. So, and the value on the term assurance is 5 million, and you're going to go and take a loan of 2 million. Definitely, it covers it. It covers it.
Thank you so much, Tosin. So this one is more or less like a frequently asked question. So the entrepreneurs are asking if Heirs Life, the asking of Heirs Life's presence, if it is in all African countries or is just a particular presence.
Okay, for Heirs Life.
Yes, please.
Oh, we are currently in Nigeria currently. We are currently in Nigeria. So we actually have our policies where you can buy online. We are actually open to selling to people outside Nigeria, but you will give us just more details about it. But we actually we sell. We've had people who don't reside in Nigeria who have bought the policies. But Heirs Life is currently just in Nigeria only. But from our website, you can actually purchase a policy end to end.
Thank you so much. Another question. Can one take all 3 types of policies or just one?
So the thing with life assurance is nobody plays a value on your life. So you cannot say your life is worth 1 million, or your life is worth 2 million, or your life is worth 100 million, or your life is worth 200 million. So for life insurance policy, unlike non-life policy, which is general policy. So let me just give a good example. So you buy a car, the car is 2 million naira. You cannot, if you go and insure that car more than 2 million naira, then you're becoming a fraud, you're becoming a cheat. And if you insure that car with us in S General, and you go to another company again to insure that car with them, that's a fraud, because you will get value for more than what's on the car. Unlike life insurance, you cannot place a value on your life. So the most you can do for a life insurance policy is to say, this is what I can afford. So if you can afford to take a term assurance policy for your life, please go ahead. If you could afford to take a whole life policy for your life, please go ahead. If you could also afford to take up an endowment policy for your life, please go ahead. There is no limitation on life insurance policy. In fact, let me just to chip this in. The third party policy that we buy outside, 5,000 naira, that we buy at 5,000 naira, God forbid bad thing, if you have a third party policy that you bought at 5,000 naira and the car hits a third party and the third party dies, the third party life, the amount on that third party life is unlimited in our Nigeria currently, but people are not even aware. The cover for that third party that's been hit is unlimited because you cannot place a value on life. You cannot generate life. You cannot bring a life. You understand? So because life, you cannot put a peg that my life is 10 million, my life is 100 million. No. So as long as you can pay the corresponding premium, which I said earlier, what that premium, that's your consideration. As long as you can pay the premium, you can choose. You can buy all policies. You can decide to choose. You can decide to insure your life for $1 billion naira, as long as you can pay the premium, the corresponding premium. So there's no limitation for life insurance. No limitation at all. Thank you.
Okay, thank you so much, Tosin. So we still have a couple of questions for this. might summarize some of them. So another question is, what happens to premium defaulters?
Okay, so we have different policies. For term assurance, because it's a pure risk policy. So if you don't, so for example, you take up, let's say, a term assurance policy of 2 years. You pay the first year and you didn't pay the second year. So the first year you paid, you were fully covered. If anything had happened, you would have been paid. The beneficiary would have been paid. But the second year that you didn't pay, then you're no more on cover. So that is with term assurance. Let's now take endowment policy. So if you are paying your endowment policy, now for endowment policies generally, because don't forget I said for endowment policy, even if you have paid 1 month's premium and a loss occur, and that's your sum assured on your policy is 5 million naira, we will pay your beneficiary 5 million naira. So because of the way that policy is for endowment, which is pure endowment policies, for pure endowment policies, the way that policy is, if you do not pay, we have a grace, what we call a grace period of 30 days. So in 30 days, if we still do not receive your premium, then you will not be able to claim on that policy at all. But if your premium was due today and you did not pay, you are still covered for the next 30 days. But if your premium does not now come in the next 30 days, then what we call lapsation, then your policy becomes lapsed until you now come to reinstate the policy again. That, okay, I want to continue paying the premium. Then you have to pay what is outstanding, and the cover continues. But if that same endowment policy is up to 2 years in our books, meaning that you've been paying premium for 2 years consecutively, that policy has earned what we call the surrender value. So if after 2 years you are no longer paying, you can come back and surrender that policy. We will give you your money back. We will give you actually a percentage of your premium back that you have paid us after 2 years. Now, if you decide to turn that policy to a paid up, as I said earlier, whereby I don't want to collect the money, but I cannot afford to pay any longer, we will keep it to maturity and pay you up at maturity. That is pure endowment. So the other part of endowment we also have is the savings part. Now, for the savings part, because you have paid up your risk premium ahead, which I said it was 1%. So if you decide to choose a risk premium of 100,000 naira, you have paid us 1,000 naira as risk premium, you are fully covered. So if you save this month, you did not save next month, it's your money. At the end of the term, is what you have saved, you will collect. So let's say within a space of 12 months, you only saved with us 6 months. At the end of 12 months, it's only that 6 months payment you collect with interest. So in that case, it is what you have saved that you will collect back at the end of the day. So that's why we have different products. But if it is a pure endowment, you need to save a minimum of 2 years to be able to get something back. But that is the one that pays huge sum, even if you have paid only 1 premium. So there are various policies. But if it's the one that is savings, the savings, if you contributed only 2 months in 1 year, contributed only 2 months in 2 years, when you come for your money, is what you will get with the interest it has accrued so far. So that's the way they work, actually.
Okay.
Thank you.
Thank you very much, Tosin. So that's all we have for the questions. I'd like to say thank you for coming to, facilitate this masterclass. Very enlightening and informative, and the entrepreneurs are really excited about it. So thank you very, very much, Tosin. We appreciate it. And we look forward to the next one next week from Heirs Insurance. So thank you. Okay, thank you so much. Yeah, thank you very much. Okay, so I've been getting questions. Is this a criteria for TEF Connect grant? Certainly not. This is a value add training just for you to know what insurance is, going ahead to take a life insurance, just for you to understand what it is. So you're not having those perceptions about it being fraudulent or people trying to take your money or people wishing you dead. No, so it's just it's a masterclass and it's a value add training. So please, this does not necessarily mean that you're going to be eligible for seed funding. It has nothing to do with you being eligible for seed funding. So just to share next steps of the program, we'll be reaching out to everyone that will be eligible to proceed to the pitching phase of the program. So we would send emails. Like I mentioned earlier, we'll be shortlisting. We're not selecting everybody, certainly not. And we've mentioned this so many times, and there are criteria that we're using to shortlist. And we also shared these criteria with you during the onboarding session and during the information session. So please, not everyone will move to the pitching stage of the program. And please don't feel bad if you do not, if you're not eligible. Does not necessarily make you less of who you are, or does not mean that you've not worked hard. There are just some certain criteria that we would usually use to shortlist. So please, we'll be reaching out to everyone that would move to the pitching stage. So once you get that email, this week into next week, please just check your emails regularly for any information from the foundation. So just so we don't waste much of our time, because I know a lot of people are busy and need to get back to work. So we're going to end the session now. Thank you for joining us today. And we're going to have the second series next week, Thursday. So we look forward to having you guys there. Thank you very much. Thank you, Tosin, again. Thank you, Adora. Foco dropped off. And thank you, Foco. Yeah, thank you very much, and have a wonderful day. Thank you.
Thank you.
All right.